Hi everybody, Matt from Invexor Trade. Today we're joined by Danny, who's a key member of the team, and he's going to give us a bit of an insight into the world of cryptocurrency, which I know is kind of everywhere at the moment. People are talking about it. You see these adverts on Facebook, but there's still a lot of people that don't understand truly what's happening. So what we've done is put a special little video together for you. Obviously invited Danny along just to give us his views on it. And you know where the potential future could be, and information that hopefully helps you. So obviously welcome Danny.
Hi.
Yeah, thanks for joining us, mate. I guess today one of the main messages we want to get across is what is crypto, and you know where do people start if they maybe heard of it. So before we kind of dive in, I just wanted to give you a bit of background to yourself, because you've obviously been trading previously and done all sorts, but now you're kind of really focusing on crypto. Is that right?
Yeah, that's right. So I suppose I've been trading for probably about 12 years. Prior to that, I was in HSBC. Started off in mortgages and then went into the commercial side, commercial banking, and then went into the international commercial banking. So worked with a lot of businesses. So I kind of understand accounts and finance. So yeah, and then I left the bank. I've always wanted to trade, basically. Always wanted to sort of run the sprint rather than the marathon in life. And yeah, this was an opportunity for me, really. I had money when I left the bank, so started investing and never looked back, really. And then I think only about a year ago, really, you know, I sort of knew about cryptocurrency, but didn't really know what it was, you know, especially back in 2017, 2018. And yeah, when the pandemic came along, you know, early last year, it kind of you know, sparked an interest, and I haven't looked back since. It's just been an incredibly evolving space this past year.
Yeah, because you were doing some day trading as well, weren't you? Long-term assets, but this has really kind of got you on the crypto. What's if somebody said to you, what is cryptocurrency, which is going to be a huge question and a huge subject to cover, but how would you kind of describe it to somebody that's heard about the word but doesn't really know what it is, and how big is it and the potential?
Okay, so I mean, it's a great time to ask that sort of question, because it's particularly what's happened over the last few weeks. You know, it's a digital asset, like a virtual currency, where you effectively you own it entirely, unlike fiat currency, which is backed by central banks. So effectively, what it enables you to do is become a central bank yourself. To put it in, you know, in a sort of, you know, short sentence, so to speak. So yeah, I mean, that's the way to put it in a short way.
Yeah, because I guess one of the things that people might not realise is that, as you mentioned, a fiat currency, so something like the British pound, the US dollar, obviously previously they used to be linked specifically to gold, to silver, where they could only issue notes or the money which they actually had in reserves. And of course, with quantitative easing and other issues like that, they've created extra money that isn't necessarily backed by anything as such. So what that means is that those fiat currencies are actually depreciating over a period of time. So $100 kind of 12 years ago is going to be a lot less now than that. So there seems to be a move of assets from people owning obviously money, and now a huge amount of money being pumped into crypto space, which is probably 10, 12 years old or so.
Yeah, that's right. So I mean, I think we've just had a massive, you know, like you say, all this dilution of fiat currencies has basically, it's forced companies to try. They need to, you know, companies that have money, they're trying to search for places to put money all the time. And the fiat world is just flooded with, it's diluted down to the very core, almost. We're not quite there yet. We will get there. You know, I can imagine it happening, you know, not in the not too distant future. And the more money that's printed, the more we go in search of other places to put money so that we can, you know, make it work for us. You know, you and I both know that money never just sits in an account. It's always got to be somewhere, making some money somewhere. You don't just do a trade, leave it, and then walk away. It's got to go somewhere that's going to move, in whatever direction that you plan it to go. So in the cryptocurrency world, particularly with when we look at something like Bitcoin, Bitcoin is a seriously precious asset by design, by the way that it's been made. In that, particularly to do with the fact of ownership, you can own it, you can take it and you don't have to pay for storage with it, whereas you do with gold, for example. If you wanted to sell your gold for tax purposes in Dubai, and you had $100 million worth of gold, to move your gold to Dubai, you're going to have to go through so much red tape. It'll probably take 3 or 4 weeks to get your gold over to Dubai, by which time the price has moved. It's just it's archaic, the system with gold. So now we have a digital era, and it's sort of really homed in on this cryptocurrency side, and Bitcoin has become the new digital gold.
Yeah, I guess it's quite bulky, isn't it, the gold as well? If you're fortunate to have a couple of hundred bars, billion bars, it's going to be a bit tricky to get on a boat. So one of the things we get asked about Bitcoin, because that's obviously in the news, everyone knows about Bitcoin, or they've heard of it. And obviously, as we'll go on in a minute, there's thousands of coins and options that you've got. One of the questions I always get is Bitcoin a physical coin? And obviously it's not, it's a digital. And then people get confused with mining. So they say, well, how can you mine something that doesn't exist? So do you have a good way of explaining that to people, what actually mining a Bitcoin actually is and how it fits in and links in with kind of the blockchain world?
Sure. So in order for a transaction to be sent, or for you to buy Bitcoin, or for you to send from your wallet to the exchange to transact, it works on a principle of proof of work. So that's where the miners come in. They are proving that this transaction exists. So you have effectively third parties coming in, and I don't receive the transaction until it's been confirmed by 5, 10, 15 different miners. So the more confirmations you get, the more valid the transaction is. The same happens in the fiat world. When we send money to Australia, it has to go through several different organizations and be verified through many different third parties, which is, in the fiat world, is extremely costly and inefficient. So what the miners get in return for mining is they get a fraction of Bitcoin, and all that accumulates up. That's how they get paid.
Yeah. So just in the most basic terms as well, people aren't physically going out mining some mysterious cave looking for Bitcoin, are they? It's a digital terminology that people have it. And Bitcoin, I mean, the price of Bitcoin, the percentage increase of that, which is what's going on in the news, is obviously huge rises. Every time people think it's going to pull back, it then carries on higher, and then up it goes and goes. But I think across the whole space, there's huge percentage gains happening. And Bitcoin is the kind of poster boy of cryptocurrency world. It's the one everyone talks about. It's the one, or not everybody, but the general public will talk about. But there's obviously, I think there are now thousands of potential options that are out there. Well, apart from Bitcoin, what kind of coins do you keep an eye on, or of interest to you? And what gives you that interest? Where do you research that to make an informed decision?
Okay, so I suppose a broader answer to that would be something like, when you buy Bitcoin, the whole concept is to buy and hold. This is where we get the term HODL. and it's just one of those sort of things that comes with it. It's a bit of a sort of cult movement. So they have these little memes that they like to use. It's a bit geeky, but good at the same time, because it completely makes sense. So when you have your Bitcoin, you hold it and you don't sell it. So then what you do when you've got that Bitcoin, in order to gain from it, you effectively, you can lend it out, and you lend it out on Ethereum. Ethereum is a decentralized finance platform. So you send your Bitcoin over to Ethereum platform, and then you lend it out for 8% a year. For example, those are the sorts of rates that they're quoting at the moment. So then what happens is you get that as an interest rate on your asset, as well as your asset appreciating at the rate of whatever the market is doing at that time. So you're getting compound interest effectively. So when we look at Ethereum then, Ethereum is the asset name that we know about, but how Ethereum DeFi is made up with all the different protocols that allow this decentralized financial platform to take place. You know, you've got your Compound, you've got your Aave. There's many different protocols inside there, which are all listed on the market. You know, Coin Market Cap. When you get a lot further down, those are the sorts of things that you need to look at in great detail. So you just literally type them into Google. You need to really just literally type them in. So start by going onto Google, look at Ethereum decentralized finance mapping, and then go to Google Images, and you'll see a list there, a big map of all the things that Ethereum is made up of, and then just take your pick and go into each one of those and drill down. It's all, the devil's in the detail, and there's no preference. They're all fantastic, and if Ethereum does well, it's only doing well because of all the protocols. The difference is that if you buy Ethereum, you can effectively, you can do something with that asset. That asset is the headline asset. So if I wanted to, I could lend, let's say I had £100,000 worth of Ethereum right now at today's market value. I could borrow £50,000 worth of Ethereum while they keep, my whole holding, they would keep it. But I would borrow 50,000. They would charge me an interest rate of, say, 8%. Then what would happen is there's no credit check, there's no credit file, there's no income affordability check or anything like that. What they're doing is they're basing it on the fact that Ethereum asset will appreciate at a greater percentage than 8%. Normally it's based on about 25% a year. So you're actually paying 8% but receiving 25. So you're getting a yield from it effectively. And I suppose the special part of it is that you're not actually, because you're not selling the asset and you're not receiving an income, there's no capital gains or income tax. So it's extremely unique, and particularly when we take that over to Bitcoin as well. More so Bitcoin with its potential growth is just insane with its it's sort of.
So that's a really interesting concept, because that's what I think there's a lot of people at the moment who are just buying various asset classes within the crypto space, but they're maybe not sure about how they can use those assets once they've got them, and whether they're just buying and then goes up 20% and then they're selling. So that's definitely a worthwhile strategy that people should be looking at. And of course, this is just, there's no advice here. This is everyone needs to do their own due diligence and make informed decision after research. But you mentioned obviously Bitcoin and Ethereum. Are there any other potential coins that people could be looking at? And I guess there are thousands out there, and they've all got their own merits. But if you had a top 5 pick, for example, and I'm putting you on the spot, but would you have a top 5 or?
I mean, I think an obvious place to look is always in safety, and safety comes with market cap. So you've just got to really just take the top 10, 15 market cap companies. They are the ones that they're going up for a very good reason. Most of them are linked in to how blockchain functions, such as Chainlink, for example. That is the link between the blockchain. So, it's intrinsically entwined with the whole system, the ecosystem of it. But yeah, I mean, the safest place to look, I mean, I'm a huge advocate of XRP. I really think that's a completely separate item to everything that we've discussed, because it's something which I believe will change the way in which the central banks certainly send money. We use SWIFT and it's just archaic. It's ridiculously slow and cumbersome. And, you have to remember that there's in the fiat currency world, when you go to a restaurant and you pay with your card, there's a difference between payment and settlement. So when you do this, you go there, you pay with your card. It hasn't come out of your account. You're allowed to leave the restaurant because your payment's been approved, but it hasn't been settled. And let's take it one step further, and let's say you use your credit card. So it takes 3 days for the payment to settle in your credit card, but you haven't paid your credit card. So in accounting terms, we don't really know where we are until everything's settled. What cryptocurrencies allow is instant settlement. So we can send and receive payments and we know exactly where we are and what's going on. And the speed at which it can happen, and the cost is just so fractional compared to what we're using in this modern day of digital era. It's just
and there's a good example, the restaurant. I think another one which maybe has caused people problems before, but when you're doing large transactions, so for example, if you want to buy a house, and you might exchange your contracts on this day, but you can't complete again until the money's settled. And if they need to draw down from the bank or the lender, the building society, that can be 3, 4, 5 days. Whereas really it could be instantaneous, and you say, right, yeah, the money's in, here's your keys. Whereas, in my previous life, we could be waiting on a key release. Somebody's outside with their removal trucks at 10 o'clock in the morning waiting to get moving, and they don't get a key release until 4 o'clock in the afternoon. And that is ludicrous. It's a very, very stressful situation. So practically, you get the money straight away, bang, here's your keys, and there you go. So I think, as you mentioned, upon the time and the cost of transferring the money is going to be a game changer. So yeah, XRP, as you know, I'm also an advocate of that. Looking forward to finding out what happens at the court hearing tomorrow. And let's see. But again, I think you've told me this many times. The regulation of crypto space can only be a good thing. And Janet Yellen is out at the moment. Again, she's fired some warning shots about the whole crypto space and being speculative. But one of the things that kind of, when I get nervous about our price is going to, completely go and it all goes to zero, one of the things I look at is these major companies which are now investing in the space. So people like MasterCard, Tesla's everyone's seen. When you get those big companies getting involved, it makes you think this is credible. Whilst it is still speculative, like any asset classes, a house, can depreciate in value, can drop. This might be speculative. It's also highly rewarding, but that regulation surely is only going to help the sector and give everyone the confidence to invest.
Well, I completely agree. It's like one of those things where if you lost your money, if you got hacked, if something happened, there's no protection there at the moment, and that's quite important. I mean, I think they're starting to introduce some sort of insurance protocols now, but I'm completely snowed under. There's so many things going on at the moment. I'm trying to expand my basket of potential assets, so that I can sort of chuck the towel in and just go, right, I'm done. I can leave this for 5-10 years, and I do not even have to think about it. I think there's lots of things out there that are so cheap. You're looking at 5, 6, 7p, some of the stuff, and you're just like, this is an absolute no-brainer. If we get corporate adoption, which is happening. This raising awareness of PayPal, Bitcoin. If all of these things come into play and people get comfortable with it, because a lot of it is about, we've talked about these exchanges and platforms and, moving things from, exchange to your wallet, and it isn't user friendly, and that's an element that needs to be addressed, because, people won't adopt it. It's too complicated. It's not user friendly. And that's why, when we looked at Coinbase and Coinbase Pro, for example, Coinbase is always the first one that I'll point people towards, because the lay person just wants user friendliness, and they just want to go in and buy and transfer, and that's it and done. Whereas, if you want to lower your fees and you want to get a better price, then you would go over to Coinbase Pro. And then if you wanted to get even better than that, then you'd start looking at BitMEX, Bitrue, all the sort of real Binance even, Binance isn't exactly straightforward. So there's just,
I think they're all different, aren't they? And I've noticed that Coinbase, I think, as you rightly say, seems very, very user friendly. And then I've noticed a big difference between the Binance, the app, and the website. The desktop version I find actually fairly straightforward, but the phone app, I look at that. But again, I think that's a key point. You mentioned market cap, and I'm thinking on all of those apps, they all show you the market cap for each digital asset. So if anyone says, well, where do I find that? Then, of course, go on those apps. I think there's a good couple of websites as well out there where you can, just type in, as you said, type into Google and it will come up and tell you that.
Yeah. I mean, I think we had a couple of questions about, trading it on CFDs and those sorts of things. And I think, it does go against the whole principle of what cryptocurrencies are all about. Because if you trade it on a CFD, first of all, you're going through a broker and you don't own the underlying asset. So that goes completely against what cryptocurrency is all about. It's about becoming your own central bank. And second of all, how are they generating that price? How many exchanges are feeding in to generate that price? Because they have to get it from somewhere. And if one exchange is giving you one price and another exchange is giving you another, and you're looking at the one that's, you should be coming out at that price and it's not actually appearing on your screen, you're like, what the hell's going on? Why am I getting this weird aggregated price?
Yeah.
So it can kind of mess with your charting and your, those sorts of things. I think when you deal directly onto an exchange, the only thing that's happening is right in front of you. The price is made up from buyers and sellers agreeing to purchase and sell at a certain price. So it's very, very accurate when you go onto exchanges.
Yeah. That's a good point. We had from our Invexor group, we had a good few questions come up actually. I guess are you happy for me to kind of fire through some of these quickly, Danny?
Yeah.
So the first one is obviously, I think this is, again, you mentioned it potentially being a bit geeky or, definitely a load of memes and things like that. But obviously the first one is explain HODL and then what is a Satoshi?
Yeah, so Satoshi's the guy who sort of invented it all, and HODL is basically just hold and don't sell. So it's just the whole principle of what the system is about.
Yeah. We had, I think this might be personal preference, and again, it won't tie you to one, but maybe a couple of them. What is the best exchange to use for trading crypto? CFDs? I think you've just touched upon CFDs, so there's obviously the usual ones out there, I guess people like IG and things, but you're not an advocate for that. You would say, buy the actual asset itself.
Yeah, I mean, you can buy the CFD, but you're going to get taxed. And, you don't know what price, the aggregate prices that you're getting. You can see that when you type it in on, because everybody uses TradingView these days for your charting.
Yeah.
Just type in whatever it is that you're buying and you'll see how many exchanges are creating a price for it.
Yeah.
Which price are you getting?
Yeah.
Do you know?
So that's a good thing, again, using someone like Coinbase, Binance, something like that, they give you that live buyer to seller to buyer price, and then you can deal direct.
Yeah.
Yep. And again, tax is very, very important there. Again, we had the question, some exchanges required to either use Bitcoin wallet or transfer to use USD, Tether. It's quite complicated, which I think you've just mentioned about it. It can be a bit of tech behind it. Is there an easier way?
No, unfortunately, it is just it's the complexity of the system the way it is at the moment. It might change in the future, but again, if you want the user friendliness, you have to just go with Coinbase and keep it simple and get charged for it.
Sure. Cool. Just a question I had. I mean, there's some great resources out there. I guess people want to know, where's the trusted people? Where can I go? This, do you have any people that you follow? Do you have YouTube channels that you follow? Twitter? Any good people out there you would recommend?
Yeah, I mean, it's ones that we put on the group before, really. I mean, if you're trading any cryptos and you want sort of direction of price, you've got Crypto, who's just absolutely mental. He's a tough person to listen to, but he's always right. And he gives really good advice. He looks out. Again, it's about this community that's being set up, and everybody's looking out for everybody. It's actually quite nice. It's really been good for me through lockdown, and being part of Invexor's just been fantastic as well. Just having everybody there, it's just been really what I needed throughout lockdown. So that's been good. So then you've got the Moon Carl as well. He's fantastic. There's lots of things on Telegram as well. So when you're using all the Coin Telegraph and You Today and HODL, XRP, HODL, or whatever it is, they're all available on Telegram. So you don't bother with the apps anymore. They just send them through and you just scroll through on your phone. Crypto's on Telegram, so there's a huge group for that. The Moon Carl, and these guys go through. I mean, there's like 47,000 messages a day with charting suggestions on altcoins. It's a huge world that I've never been availed to until recently, particularly because you just keep finding out more and more and more, and it's a world that it's incredible. It's really geeky. Which I never used to be so reclusive, but lockdowns forced that situation. So, but yeah, there's Twitter. You've got
altcoins. I think that's a YouTube one. I think I follow as well. Just the Moon, obviously, Carl. Altcoins. I think YouTube channel. There's a kind of good source of people can just go out and start listening, and I think that's a good point. There seems to be the idea, and I think this is true. Where you have some of the big banks potentially, which have, potentially purposely withheld certain information to the general masses of people with regards to investing, whereas, and not just banks, investment institutions, but whereas the crypto, everybody, it's more about the people, it's about the community, where you have to have everybody involved actually gets all the money together through the mining and the verification. That's more of, I've heard people refer to it as the people's central bank, because as you say, people own it themselves and they're looking after each other. So it's a really supportive community. I think the crypto community, it seems to be very supportive, and people are genuinely trying to help each other with information, which I think is only a good thing.
And that's goes back to one of the questions on the list there, which is about the what's been the fundamental difference between trading equities markets and cryptocurrencies, and it for me the biggest thing has been the lack of it's a trustful environment. It's corruptless basically.
Long it may continue that way. Let's hope people don't start changing, but for the time being it certainly is that way, isn't it?
I think by design, you can't ruin Bitcoin, because the whole premise of the way that it functions with its DeFi and everything, you can't rip it up and rip it down. You'd be stupid to sell it. You might as well buy it and hold it and put it in DeFi and keep it forever. It's the whole premise of it. It's not corruptible. It's not by the way that it's built.
Yeah.
So it just makes it incredibly...
you can't get, I guess, one of the things which central banks won't like, actually, about fiat currency and notes, is people can just go and print their own notes. They get a decent printer. That's how you get counterfeit money. You can't get counterfeit Bitcoin, or you can't get... So that's why gives me confidence that this will be adopted by central banks, because, whether it's a good thing or a bad thing, who knows, but there will be a digital footprint of some sort out there, and people can't counterfeit a Bitcoin. It's not a note, a £50 note they can just go and print themselves. So you have got it. Just going to fire through some more of those questions, Danny. The couple was specific to Coinbase and Coinbase Pro. What's the main differences, would you say?
Again, I think it's just the user friendliness. So, you use your Coinbase Pro if you don't know what you're doing and you just want to buy some coins and leave it. And if you're interested in sort of getting involved in the space a bit more and looking at some things in a more detailed way, looking at order books and transactions and charts, really getting stuck into it, then Coinbase Pro, and then move on from there over to Binance, and then you can start getting into Bittrex and BitMEX and HIT, BTC. The list goes on. They're centralized exchanges. You can go to decentralized exchanges as well, which get even like teletext. It's pretty.
So there's a lot. I can see. I need to do my research still on it as well. Again, I've got some of the questions. Crypto is obviously really volatile, or at least the perception is. Can have huge spikes, huge drops. Why is that?
Well, I think it has a history of being like that, and that's the reason why it had a retail ban. It wasn't so that people couldn't get involved. It was because, when you've got an index that moves up to 20,000 and then, drops and we can't afford to have that in the environment particularly in the environment that we're in at the moment. That's the reason why all these brokers decided to stop allowing people to, investing on the retail side. At first I was very skeptical. I thought they're doing this to pull the carpet from the retail people and stopping the people being able to invest. But when you look at it from a point of view where there's people that don't know what they're doing, I know everybody on Invexor does, but I think they can't sort of specifically identify certain people, and they've just got a blanket cover, and that's what they did. So the volatility came from the asset maturing into an adoptive phase, which is where we are now, waiting for its moment to resurface, and that's exactly what's happened now. So I think there's obviously going to be market volatility. There's long positions and short positions open on open interest, which are not physically held assets. So those positions will open and close all the time. That's the structure of the market. So it will remain volatile.
Yeah, and I guess to help with volatility, one of the main things in any type of investment is don't put all your savings, all your eggs in one basket, as they say. Look at a chart, do some basic analysis of a chart. If it's just shot up 200% in a week, then that doesn't mean it's going to pull back. It can go another 200%, but do you want to be buying at that price, or do you want, simply using a moving average? Do you want to wait until it gets back to the mean price? I remember the stories. I saw it on BBC News when Bitcoin first went to 20,000. They come out and say, everyone's buying Bitcoin, and there were people remortgaging their houses in America, taking out credit cards, loans to buy Bitcoin, and then it dropped. So a lot of people got burnt, and that gives people a bad view of it. But again, just following some basic rules, that don't invest everything in one asset class or one coin. Take your time. Don't feel panicked in investing. Educate yourself so you can make an informed decision. It's not the fear of missing out again, and everybody just throws money at something hoping they'll get rich quick. You can't do that and not expect to be burnt. You need to invest over a period of time is a safer way to smooth out that volatility. If you've got £10,000 in the savings, don't put £10,000 in any one asset class, any one coin at any one time. If you're going to do that, maybe spread it out, £250 this month, £250 next month, whatever your strategy is, and also have the time frame. Because again, the people that get burnt, then they buy at 20, it drops, they sell it, what did it go down to, about $5,000. Yeah. They sell it at $5,000 and watch it go back up to $60,000, which we're nearly at. So again, if they just had the outlook and they had an exit strategy and their time to say, this is never sell it. To use what you say, you never sell it and then you leverage off it, then they would have actually made loads of money. Instead, they panic, they sell because it's dropped, which a lot of people will do. And actually, when it dropped, they should have been accumulating more to then ride the next wave up. So that's key. And again, people need to remember that, do their research and have a look into it. So no, I completely.
That's quite a good point, actually, Matt. When you talk about leveraging from it as well, because there's other ways of doing that. With if you use Bybit, for example, let's say you own 200 XRP, and you have that 200 XRP, you send it over to Bybit. You can then leverage off the 200 XRP. So you've got let's say you do 5 times the amount of XRP that you've got in the account. You open a long position, you close it, you make 20 XRP. The 20 XRP just gets added to your original amount. So whatever you make, it just goes in addition to your original stake. You run the profit and loss from the currency that you hold, and you receive the same currency for the profit or the loss. Yeah.
It's good point. I don't think a lot of people know about all this, Danny. I think there's a lot of people out there to see the price of something going up and they think, great, so they release that money and they sell that, make a profit, which profit, it's always a good thing, but actually they could be smarter with their investment. So really key point, people need to kind of look at that. And then I've got a couple more here. Do you diversify across asset classes, or are you purely crypto based now?
So in terms of the different asset classes, I am just crypto. I don't think that I feel comfortable in any other market at the moment. So, but I have within that asset class, I am massively diversified. I own quite a lot of different things, and it's not huge amounts. Like you say, you have to sort of limit your exposure, always keep some powder dry. The market could, take a turn, particularly when in times like this with a litigation lawsuit thing regarding the class of security or currencies. So, anything can happen, and profit is profit. And, sometimes you might need to take some off the table, but at the same time, it's better to have your fingers in quite a lot of different things. Because the likelihood is that when one gives, the other one won't, and or you'll get a massive rise in everything if this all adopts and becomes amazing. But I do also, I like to home in and specifically identify some opportunity, and that has been XRP for me.
Yeah.
Everything else exists in a DeFi sort of situation.
Yeah, I think that when you said that, you mentioned earlier, sometimes I get the question, is it too late? Have I missed the boat? And again, it comes down to your exposure, your time frame, and people say, well, where do I start? So I think you've kind of covered quite a lot. Actually, been really, really helpful, and you've kind of said, ultimately, it's like any investment out there. Go and do some research, know what you're investing in. Don't put all your money in it in one go. Keep some powder dry, as you say, so leave some money in reserve. So if you do have the benefit of a drop, you actually can buy more. Have a decent time frame, an exit strategy, and how that asset's going to work. So you've covered a few really key points there about how you can, leverage off it, or get some interest on it, or use it to get some more. I think it's been a real good lesson because even for me, I buy and I'm buying constantly at the moment different coins. Some are like say 5-6p. You can buy 100 coins for next to nothing. So it's like, well, why wouldn't you? But not now. Actually, thinking about how I can use that to actually make more money is a real opener. So I'll be getting hold of you in the Invexor group to go through some of that, Danny. I'm sure the others will. So. Is there anything else you'd like to cover today? Because for me, I think that's been a really good kind of overview and intro on it, and I'm sure we're going to get some questions, and obviously we'll put this on YouTube, so we'll keep an eye on any comments in there if people want to ask any questions, and of course in the Invexor group we'll do the same, probably put it on Twitter. So is there anything else as like a leave-in points or something is a key bit of advice in a sentence or two that you think people could take away?
I mean, I think you've kind of covered everything off. I just think, just make sure you do as much research as you possibly can, because, we are in a really good phase at the moment, and, we're still in a bull market technically. But, we don't know what's around the corner because we're in such an early adoptive phase. So just be mindful of that. Stick to what you're doing. All of everything that happens on Invexor with your charting and everything on Invexor can all apply in the crypto space. But you have to get to a stage where you're very confident in what you're doing, and particularly what to do with your risk weighting and fund management and allocation with the assets, and then diversifying.
Yeah. No, good. And on that, actually, with the charting, I would say crypto space is hugely technical. The charting is out of this world, because every chart patterns, Fibonacci, moving averages, unreal how they're playing out. So anyone that's interested, make sure you look at the technicals, because they are phenomenal. A bit of fun then, Danny. Who's going to win? Who will win eventually on the SEC versus XRP or Ripple? Who's going to come out on top?
Well,
we'll look back at this in a few months.
Well, I mean, I think you already know what I think. I think that XRP will get it. I'm not sure if it'll be a settlement or how it'll play out. It might take a little bit of time, but I think when we get the new chairperson's already been assigned, but we've just got to get him sort of in that position, and I think his name's Gary Garslinger or something like that, Garsler or something, I can't remember. But when he is in his position, I think that's when we're going to get the decision. I think he's going to come in and he's going to be hopefully crypto friendly and just
that's what you want. Crypto friendly, please.
Yeah. So I really, really hope if that happens, you want to be in everything before that happens, because if he is, it's going to go. The whole space will go mental.
So XRP, is it going to be $1 or 30 cents first?
Might be 30 cents before it's $1.
Yeah, we'll hopefully it'll be $10 plus in 2021. That would be nice.
It would be.